Good morning and welcome to Market Monday for October 6th, 2025. Well, that was a breeze, wasn't it? September finishing up 3.5% for the month, the second best September return in the past 25 years. And that's icing on the cake for the third quarter return in the S&P 500 stock market, up 7.8%, the eighth best third quarter in the past 55 years, and the fourth best third quarter return in the past 35 years. Folks, the market has been good, extraordinarily good, historically speaking, and while it may be tempting to think it could go on like this forever, we always need to turn our attention to managing risk and diversification. Why? Well, for one, we've been looking at this all year. New all-time highs. 29 so far this year in 2025. You see how these tend to cluster? Great, that's wonderful and probably a feature of the markets in general, certainly bull markets. But also look at this, 6 years without a new all-time high. That means the market peaked, and if you were invested entirely in the S&P 500 stock market, you didn't see a higher account value for 6 years. What if you were in retirement, taking income during that time, with inflation skyrocketing? .com, another 6 years, without seeing another new high in your account. If you're again invested entirely in the S&P 500 stock market. Global financial crisis, 5 years. What if you were taking income then? And it's not just the lack of seeing a higher account value, it's having to withdraw funds while the market is in a drawdown for a sustained period of time. So while we would all love to feel like this will last forever, we always need to remain vigilant about allocating assets for a variety of market conditions. On the bright side, while there's no shortage of opinions on how expensive or overvalued the stock market is, Matt was just talking about this last week.
Perhaps one thing that spooked markets was Fed Chair Powell, during his press conference, stated stocks were fairly expensive.
Look at this. This is the source of stock market returns by decade. We've looked at this a lot before, and we know stock market returns come from earnings, multiples or valuations, and dividends. Well, look at where the lion's share of stock market returns have come from the last decade and a half. Earnings. In fact, earnings growth has been the strongest in history. So it's not just a frothy market, but there's been legitimate earnings growth backing it up. And today we'll leave you with this. Mark Twain famously quipped, October, this is one of the purely dangerous months to speculate in stocks. The others are July, January, September, April, November, May, March, June, December, August, and February. Have a great week.